So for anybody who listens to our podcast, we just did a whole episode on this, but everybody's talking about market volatility, tariffs, trade wars, economic policy, all that kind of stuff. There's a lot to take in. There's a lot to digest. I just wanted to point out a couple of positives that most people aren't talking about investment markets so far this year. Both of them are detached from what the so-called talking head experts and strategists had predicted coming into this year just a handful of months ago. And that is, number one, international stocks actually outside of the United States have actually fared pretty well. I'm recording this video in the beginning of March, where developed countries outside the US, their stock markets are up anywhere from 8 to 10%, depending on what index you're looking at. Emerging countries like China, for example, those stock market indexes are up anywhere from 4 to 6%, while the US is kind of flat to negative, again, depending on which index you're looking at. Also, folks have talked about maybe Trump and his policies being reflationary or adding to inflation again. And then the thought with that would be interest rates would also continue to stay a little higher. At least the last couple of weeks has been the opposite. Interest rates have started to fall on the long-term end. That's been good for bond prices. So two pockets of the market, actually, of capital markets that have actually held up and looked a little more positive and are finally something different than tech companies in the US going up. So reasons to stay diversified.